I'm back, baby. What a ride. The flight was smooth, but the guy I sat beside, he smelled like somebody poured Kool-Aid in an electrical socket. That's an oddly specific smell. Speaking of, have you ever wondered how airplanes work? How giant pieces of metal fly in the air? No, I haven't. And yet you trust them to get you where you want to go. Doesn't that make you nervous? I guess. You know, it's a lot like how people look at investing. I'm going back on vacation. Kathy, using the rest of my vacation days.
The finance geek.
So let's talk about investing. This time we're going to delve a little deeper into some specifics. If you haven't watched a video on investing basics, then pause. Don't go any further, you animal. Don't be like one of those people that steal their friend's Voltron action figure without even knowing what it is. I'm talking about you, Tyler. I never forgot. So anyway, go watch that video and come back. So today we're going to be talking about vehicles you can invest in. They can be called investments, assets, investment assets, but they're referring to the same thing. Investment assets are any type of investments that you can buy on the public market. The New York stock market is an example. You can buy these type of investments in any sort of investing account, IRAs, Roth, brokerage, etc. Think of these investments as breakdancing lessons. The longer you take these lessons, hopefully the more skillful you become. But that's never guaranteed. Check out my 6th step. First, we're going to go over mutual funds. Now, you may have heard of them because they're pretty famous by now. Additionally, almost all 401k plans have them in their plans. So you may be invested in them without even knowing. Now, a misconception is that a mutual fund is different than a stock or a bond. See, technically they are, but that's not exactly accurate. You see, how they work is they pull money from investors like you, me, and gold hoarding dragons. Then a mutual fund manager takes that money and goes and invests it in things like stocks and bonds, or whatever the objective of the fund is. So you see, you're still invested in stocks and bonds, but just not directly. Think of them like driving versus carpooling. You could take your own car, choose the roads, the speed, etc. Or you could pile together with other people going to the same place and have a driver that knows how to navigate that stuff better. Plus, it's not going to cost as much because you can split the bill. That's kind of like a mutual fund.
Hey there, my name's Devin. I just moved here from Pensacola, Florida. I just want to let you know right off the bat that I'm a hugger. Come here, bring it in.
So let's talk about ETFs, or exchange-traded funds. They work similar in terms of pooling investors' money. But after that is when they start to differ. First is that mutual funds only transact once a day. Meaning if I buy a mutual fund, then that order only gets processed in the market at the end of the day. ETFs, however, get processed immediately, which is really nice. Another difference is that they tend to be more focused on a specific sector. So you can get an ETF that focuses on energy, technology, real estate, etc. I haven't seen one that invests in Barney the Dinosaur commemorative plates, but it's probably out there. The most popular type of these funds out there are called index funds. This is where an ETF copies how an index does. For example, the S&P 500 index. An S&P 500 index fund would copy how that market is doing, both going up and going down. And it does that by owning one of each stocks in the S&P 500. The best way to think about ETFs is like carpooling with people. You can choose more easily when to get in the car, what roads you go on, and even what kind of car is taken. They're the more specific, flexible option.
Individual stocks and bonds. This is the last type that we want to touch on. Now, we have talked about this in other videos, but we want to cover them one last time because you can always buy stocks and bonds directly in your investing account. The difference is that you will not have a money manager like in a mutual fund or ETF to help you pick what investments are put in your account. However, you have complete control on the investments, and it's slightly cheaper because you don't need to pay anyone to pick the investments for you. Think of this option like driving yourself around. You can choose where you go and how you go, but you have to do the driving, and if you take a wrong turn or run into a tree, well, that's on you.
That's our show. Thanks for watching. And remember, if you're trying to get anywhere, consider a carpool. We'll see you next time. That's our show. Thanks for watching. If you enjoyed this video, please consider following. And if you think we can assist you in any of your financial endeavors, please feel free to contact us. Our information is in the description below. Thank you, and we'll see you next time.